Okay, so I just want to talk about the most important principles on how to trade and analyze any VIX or any index on derivative. You see, it's very much important to understand not just the strategy but also the principles that can help you to trade and be profitable on the market. So today in this video tutorial, I'm going to teach you specifically on how you can take advantage of this, because you need to understand. So today we will be looking at the swing highs and swing lows, such as these swing highs, okay, these swing lows, swing highs, swing lows, swing high. So these are going to be our pivot points that we'll be looking on today. Please subscribe for more future videos like this, because I usually post contents regarding trading the financial market such as this one. So I want to talk about the strategy, the principles, the lows and the highs. Okay, so in this case, a lot of people just know how to use these principles like the highs and the lows using trend lines, that the market will come, bounce like it did here. It bounced, but we can see that this structure was already broken and the market came down. So whatever the case, those people who trade or trend line traders here were ready to sell at this particular point, because they believe that once the market breaks the trend line like it did here and then it comes back, they were supposed to enter, but unfortunately the market keeps going. So to understand what is happening here, we must start on a higher time frame, such as daily time frame. Why daily time frame? Daily time frame helps us to understand the position of the market, where the market is coming from, where the market currently is, and where the market is going. These three are very much important. So let's go on a 24-hour time frame so that we can see what is happening. So on a 24-hour time frame, I can clearly spot that there is this powerful order block where the market is coming from. So this order block here, though a lot of people disagree, please understand, analyzing the future movement of any market is determined by looking at what happened in the past. So here I am using this past here to determine the future here, which has already happened. So this bullish order block, which is the last bearish candle, is the one that made the market here not to proceed and continue dropping down. Okay, it is partly trading these indices using smart money, and the principle states that, for example, this low, all right, this low here, this low there, and then this high there, these are very much important points. So the market was in a downtrend. It kept creating lows and highs, lows and highs. So here it created this low, lower low, and then it went created lower high, lower low, and then we can see that the market pushed up, which was a sign that the market was done dropping to the downside. Let me explain. I am on a 24-hour time frame. So what happened was that as the market was dropping, it kept creating the series of lower lows and lower highs. So there was this lower low right there, and then the market came and created a new lower low, and then lower high, and then it pushed and created another lower high, and then lower low. All right, these pivot points, low high and then lower low. So if you can see, this low here was broken when the market dropped down and created a new low. Okay, so as a trader, you are supposed to take into consideration what you are seeing, the lower lows, lower highs. Now, when the market came here, it bounced. We can see that this order block, though we did not know at that particular time that it was going to be an order block, the market rose and then pushed up, went up there. Now, when you look at this time, you will see that the market broke the structure of this lower high. Okay, it was broken, and also this one was broken. All right, and also this one was broken, and the market created a new higher high, higher than the series of these lower highs and lower lows. So it was a change in a trend. Let me explain what that means. What this means is that if the market is in a downtrend, like it was coming, it kept creating the series of lower lows and lower highs, lower lows and lower highs. When you see this, it is a sign that the market is in a downtrend. Unfortunately, the trend came to an end the moment the market pushed up by breaking the previous series of lower highs the market was creating as it was in a downtrend, which was a sign that the change has changed. All right, the trend has changed. So the market had to push and go up by breaking the structures of the previous lower highs, lower highs, lower highs, and the market went and created a new high higher above the previous swing low of lower highs, lower highs. So the moment the market did this, it was a sign that the market has changed the trend because it has broken the previous supply, which were created by the series of these lower lows, lower highs. Also, what this simply means that it simply means that the moment the market breaks the previous levels here, at least 2 or 3, it is a sign that there is a change in a trend. So the moment the market broke these levels, reached there, and then it reached there, it made a retracement. This retracement, it was not to mean that the market was going to continue down. Already, it has violated and broken the structures of the previous higher lower highs, all right? And these were lower lows, and the market expected to drop by breaking this one in order to create a continuation in the trend. But unfortunately, the market pushed up by breaking the structures, all right? Also, there is also a ranging structure here, which we can mark like this. This is a ranging structure. It was altogether broken with the previous swing points here of lower lows. So when the market broke these lower lows, it was a confirmation that the market was not going to continue pushing. Okay, it was not going to continue pushing because the trend has come to an end. So what happened when the market made a retracement like this? It was either going to bounce on this bullish order block. All right, so we are going to name it bullish order block like this. Bullish order block. So we will name it like that. This is a bullish order block. So we expected it either to bounce here or to use the previous supply to establish a demand. So since the market is influenced by 2 levels, supply and demand, okay, so here the market broke the supply of these swing points. It went and housed a new supply. So after housing a new supply, it needed to come down to create a demand, all right, which was now going to give us an indication that the trend is over, the downtrend. So the market needed to drop, not to drop further below this swing low here. it needed to end somewhere here or there on the order block. This is where now order block plays an important role. So the market bounced here, it pushed and went up. It created a demand on the previous order block, and then it had to push back up there and create a new supply, a little bit higher than this one. Then the market issued a drop again. This time, they bounced on this order block, previous bullish order block here, where they now established another bullish order block, which is this one. Our market using rare horizontals like this one, all right? This is a bullish order block. So now, if you look at this, the market, as it was dropping to the downside to come and make a retest in this zone, it was creating the series of lower highs and lower lows. So this was a lower high, and then this one was a lower low. And then the market came and established a lower low within the area of an order block, which we should understand that it was not going to go anywhere because this was a daily order block or a demand which was established in an order block. So the market started making a rise. As you can see, these candles are looking healthy, and the market has also managed to break this previous lower low. It has broken this one, and the market will keep rising because it has broken this level, which was acting as a demand, which was created on these swing points. Okay, now if you also see carefully, the market has given us that this is a double bottom, which is created using the principles that I'm explaining to you. So the principle states that if the market had gone up here and then fails to break above that one, it drops. That means this one is a weak low. Okay, but if the market pushes up just like it has broken above the trend line and also above the order block, this means that this one is a strong low, yet this one here is a weak high. It also means that the trend has already changed, just like this one here was a weak low, which managed to break this weak high, and then this weak high by creating a new high again, this one. So again, this low here, where the market started a move, pushed up by breaking this high, which means it was weak. Okay, so again, the market created a new high, issued a drop to the downside. However, this high was too weak such that it could not break. It ended here and then pushed the market up. Okay, so the market came back again. It could not penetrate below. This one is a strong low because it has managed to break that high. Hence, it is the change in a trend. Okay, because also the trend came to an end when the market started issuing a consolidation. So you could have entered especially here because the market already gave us a clue. All right, how do you confirm that the trend has changed? All right, let's just say everything here has not yet happened, but the market is just somewhere there. How do you know that the market is not going to continue dropping to the downside? We are on volatility index 75 here. This is what we are analyzing, VIX75. So what is happening here is that you can confirm that there is a change in a trend the moment the market, this low like it happened here, it start making a move high by breaking this consolidating structure as well as this lower high which I marked. At least it breaks two previous swing points. So it broke this one, it broke this one, including this one. So when the market made a retracement, it was just them trying to make a retest after the break of the structure. All right, so it can be this structure or consolidation structure or a structure made by the swing points. So the market had to return back again. At the same time, it was now making a W or double bottom. So the market dropped and then it had no any other option but to bounce within this daily or 4-hour order block and then started making a rise, because it was within this zone that the market was not going to proceed. So we can see this high has been broken by this strong low. How do you consider a strong high and a weak high, or a weak high, a weak low, and a strong low? So if a low breaks the previous high, it means it is a weak high and the low is a strong high. If the high breaks the previous, like it did here, if this high managed to break the previous low here, it means this is a strong high and this one is a weak low. And if this weak high here, it is weak because it failed to break below this low. That is why we can see the market started rising. And this is a strong low because it was also established within the range of a bullish order block. So you could have prepared and entered here if you also use a daily chart to analyze. So if I take you just like this, I take you now on a 4-hour chart, we are going to have a chart that looks like this. So as you can see, I was analyzing on a higher time frame. And now you can even confirm the highs that I was trying to explain to you on a daily time frame. These were the lower lows, lower highs, lower lows, all right? Lower highs, lower lows. These play a significant job, important role when it comes to understanding how to analyze the market. And this pink thing is the order block which we saw on a daily time frame. So to understand, we can even tell the reason why the market ended here, though it did not reach this daily order block, and but fortunately enough, it managed to reach this 4-hour order block here. That is the reason why it bounced there. If you also look carefully, you will see that there is this bullish order block, which is the last bearish candle. And it is considered a powerful bullish order block because it managed to break above this swing point where I marked this blue line, and also above this one by establishing a new high there. That is the reason why when the market issued the drop, VIX75 had no any other option but to bounce here and then start rising again. So this was a weak low because it ended here, it could not break above that one, okay? But this one here is a strong high. This one is a strong high because it broke below this low here, the low, the swing point, and then it dropped. Now, when you look carefully, you could have also confirmed your entry because the market drop created a sign of a W within the daily bullish order block. You could have taken this trade, all right, because this also was the low, this one, the low of the day. So the market pushed up, came, bounced, pushed up, came, bounced. Unfortunately, it started making a rise. Also, it was a sign that the market was now was changing the trend. So on a 4-hour time frame, we can see that the market broke that high. All right, that high, it broke. It also broke that one here. It keeps creating new series of higher highs and lower lows. It has also managed to break this low, this high here, and the market is bound to rise. Okay, the same thing, because the market is fractal. Whatever happens on a higher time frame happens on, on lower time frame. You can see these series of higher highs the market keeps creating, and also the series of lower lows. So today I just wanted to explain to you on how you can confirm the change in a trend when the market is about to change. Like I said, these swing points here, which we saw on a daily time frame, play an important role. To know that there is a change in a trend, the market must break at least 2 or 3 of these swing points. After it breaks, it will reach a certain level and then tries to make a retracement back to the same level, and then it is not going to go below the lowest point of this day or the lowest point at the supply. However, had the market broken below this low here, would have considered it the break of structure and the market would have continued to go. In short, it is about understanding the lows and highs, which holds a very much important aspect and secret to you being a profitable trader. If I take you on a 30-minute time frame, we have a market that looks something like this. All right, it keeps creating the series of higher highs and lower lows. All right, these also play an important part when it comes to analysis. All right, so these is also what makes up the consolidation on the market. If you can mark them like this, this is how they would look. Okay, this is how they look. So they are the secret to you knowing where to trade, when to enter, and so on. All right, and as you can see, the market keeps establishing the demand using the previous level of supply on this broken structure. Okay, though this one dropped a little bit and then it had to go back, but the truth remains the same. All right, the market will never go below the swing lows when the trend has changed, because trend line traders here would even put it something like this, where they would consider and expect the market to keep pushing and rising up higher just like that. So that is it for today, guys. I will see you in the next video. Please subscribe to learn more about these principles. Bye-bye. See you.